What's up, what's up? Welcome back. Just wanted to do a quick recap of a trade today. Coincidentally, as I'm taking this trade, a buddy of mine asks, hey, should I buy this? And I've been trying to get this guy to trade for a long time. And he sends me a suspension for a car. Ends up being 600 bucks. And so I'm trying to convince him. I said, watch what I can do with 600 bucks. Like, with that same capital, I could make 10% today. It'll be more tomorrow. So I want to break that trade down. I tried to pull it up on screen. It's not showing the 392 puts. If you guys were live on Don Fran's show yesterday, I told you guys if the market sells off, I'm selling the 392 puts. I'm pretty confident they're not going to get exercised. I know FOMC minutes and all that came out, but I didn't care. I showed you guys the lines. Here's my zones. Here's why I sold those. So this video we're going to talk about what I have now is an iron condor, but it didn't start out that way, and I gained a lot more than somebody just selling an iron condor. Because an iron condor is basic, right? It's just you sell a call spread, you sell a put spread, and you want the stock market to whatever you're in to end inside there. Whether it's high end, low end, doesn't matter. As long as it ends inside there, it's 100% profit. But what I ended up doing, so if you look right here, I have the 392 put. So I sold the 392s, but did a $2 spread in this account. So my main account actually was even crazier. So I sold the 392s naked. I was like, you know what I'm gonna do? I'm gonna sell a 39. I'm gonna buy the 390s on top of that, turn that into a spread. Then when it pops up, I'm gonna turn it into an iron condor. So we legged it completely in. On here, I just did the spread though. This is the TOS. When you guys see this up, this is just the bot account. I have a trading bot that just does sell an iron condor every week. But that's when the markets are efficient. Right now, they're not exactly efficient, so the bot is turned off. Full running, but I control when it goes on or off. When the market returns back to market efficiency, then I'll turn it back on. But sold the 392s first. And if we look in the chart now, how this is going to pan out later, so I'm going to sell 392s, it's going to pop up, I'm going to sell 390 calls. Total, I'm going to lock up 600 bucks. You're going to see right now, P&L open is 62. In the end, I should collect a little bit more tomorrow. So, to break this down, like I told you guys yesterday, if we get outside the expected move, I'm going to sell 392s. And that's what we saw right here. It sold off. The 392s are jacked up. I sold 392s. That's outside 2 standard deviations. The S&P would have to be going for a 3 spot. Not likely. So in here, I'm playing the numbers game. So the profit's not big. Again, this is just 1. So if you scale it up, it means you want 10%. It's 10%. SPY is, well, we'll call it liquid. Yeah, you'll have no problem getting your fill in. So anyway, it sells off. I'm thinking, all right, we're actually expecting like a $5 move or something until the end of the week. So I'm well below that at the time. Like, let's do this. So I sell those. I even told my chat, like, hey, if this pops up, I'm going to go ahead and sell the calls against, turn into an iron condor. And it seemed like right in here was like an eternity, because this is the 15 minute. We had one pop up. So I'm just like an hour in and we're kind of nowhere. I'm like, yeah, my puts are up. But I was really kind of thinking, like, what if FOMC sends it? And then we saw it just really kind of pop up here. And then so running up right before the FOMC, how I had pictured that was sell off, sideways, FOMC, we send this thing up, that's when I was going to sell calls. We ran it up right before. If you've been following my channels for either one for a while, then you guys know when I see a run up right before a report, I assume somebody has insider information. Pays out more often than not. So when I did that, I sold the other calls against it. I didn't change my P&L or anything. Once I had sold the put spread right here, I could sell calls anywhere and not affect my P&L, because you can only lose once on that particular play. So as long as you keep the same expiration date, it turns it into an iron condor. So at that point, I had only locked up. Let's just pretend I did one. So I'm in 3 of them. But if I did one, locked up $200 here. Now it pushes up. It doesn't lock in another 200. It uses the same 200, because I can only lose on the downside or the upside. So essentially, I had a free play with some capital out there that I could take. And then today couldn't have just landed any better. Here's the open, here's the close. We're within a dollar from where we are. That was ideally, that's best for options expiration. If you pull this up, the reason why I have 3 is actually I have some for Thursday, tomorrow, that expire tomorrow, and then some for Friday. So tomorrow, obviously, will be closed tomorrow, and that'll be managed, but why not? So how fast could you grow an account doing 10%? What I just explained to you was selling something so basic and so easy. Now your losers are much bigger than your winners, right? Because I'm collecting 10%. You know, like I could lose the 600 less what I collected, so we're roughly throwing up just over 500 bucks to collect 60. In the trading world, that doesn't, if you don't fully understand things, that sounds off, because all the YouTubers and traders that really don't know what they're talking about, they love to preach like, I only do a 15 to 1, I do a magical 5 to 1. They look for these just magic ratios that, sure, when those pan out, I take them. I'm not against them, but they don't actually pan out that often. It's something you can do every day, especially on SPY. The S&P has expirations Monday, Tuesday, Wednesday, Thursday, Friday. Without doing a single day trade, I could go on Monday and sell Tuesdays. And on Tuesday, when that closes out, I could sell Wednesdays. I could take it day by day, keep it just, as long as I have anything explosive happening, those base hits truly do add up. And one thing you can do is do it like this. Leg in. You don't have to sell an iron condor for we're expecting a $5 move, so you go $5 here, $5 here, sell it and hope for the best. You can leg into that way and essentially double what you would make versus an iron condor if you do it right, if your execution's right. And I'm showing you an awesome scenario. I've definitely done this many times before where it does just continue south. I'll sell puts right here and it just continues on. The next day it pops up, I ain't green. I've had some that just did continue down and just sold off, and then yeah, you take the L. But today I just couldn't help but make a trade recap just because it did pan out picture perfect. Again, days like this do happen. This isn't a rare occurrence, but this is also like if this video is the equivalent of me drawing out a where is it at? There are Head and Shoulders in here somewhere. You guys know where I'm going with this. Head and Shoulders. So imagine me drawing this out and just saying this is how a Head and Shoulder pans out. We're squared up. Someone always says the shoulder's higher on the other one. Oh, hang on, there we go. And then if a stock does that, go short, and then it did. So I show you like the one time it did. But I wanted to do that just to show you the power of it, and not just here's what it did, but here's what it could do. Use your imagination. So excuse the picture perfect play as far as this goes. But that is the reason why. This is why you could just sell the put. And then wait to sell the calls later, or if something pumps up, you sell the calls, and when it drops off, those puts get juiced up, and then you sell those. Typically, the main purpose of this is when you sell an iron condor, if you're dead center, they'll be pretty right there, but if you're thinking we pushed up, so then you sell an iron condor, you'll see like you're collecting most of the bulk on one side and pennies on the other, and that's the quickest one to take that L and take those profits away when it does sell off, or at least they'll throw your P&L around, and you just got to hope you're right and it stays in the middle. So I want to show you just how powerful that could be. You can eliminate just that selling that other one for pennies by doing it this way. None of that is a day trade unless I were to close it today. Because I'm selling a put spread here, I'm selling a call spread here. Now when I buy those back to close, that is your round trip. So when I do that tomorrow, that will not be any day trades at all for those of you guys that are under PDT. That would be 2 day trades had I closed that today. By the way, 10%. So to my buddy that's thinking, should I spend $600 on this suspension? You could just do this a few more times. You would pay for that suspension. You would have enough money to pay someone to install it and still have money in your account. Stop buying stupid toys. If you're not invested, this is going to be another video for another time, but you take your income, you pay your bills. A stock account, a retirement account, something like this needs to be considered one of your bills, and then you play with the stupid money after that. Then you have disposable income, but this needs to be just as important as you buying food. So for everyone out there, if you're thinking that the toys will come, but they come a whole lot faster and a whole lot cooler when you build this and do this correctly first. Anyway, I'll wrap it up here. Again, so I'm going live more often on the other Don Fron show. This is Don Fron Trading. Ideally, these should be quick, to the point. Anyway, hit the thumbs up, the subscribe, all the cool stuff. If you guys ever want to, well, you want to stick around. I'll see you in the next video. Have a good one.